What's going on, everyone? So the market was very choppy today. We alerted some calls overnight yesterday, and those were good for about 15%, maybe even 20%, depending on if you got them much cheaper, right? And then towards the end of the day, today I alerted into some completely lotto puts on the SPY. So in today's video, I'm going to explain why I think the market could have a red day tomorrow, but I'm not 100% sure. So we're going to go ahead and talk about all of that. But if you guys enjoy the content that I'm providing, please make sure to subscribe to the channel, put on post notifications, like the video. All of that stuff does really go a long way, and I would really appreciate it. So I'm going to go over the SPY, the NASDAQ, the Russell 2000, the 30-year bonds, the large tech stocks, and the crypto market. All right, so without further ado, let's get started with the video. All right, so here is the SPY. So we had a bull flag, and we clearly gapped up, and we failed, okay? So now, usually when this happens, I'm going to show you guys a bit of the last few times that this happened and what happened afterward. So, all right, so you can clearly see a very clear bull flag here, right? And let's first start back here. So at the end, in December, we had a bull flag as well. You can see it right here, right? We gapped up, and then we failed, and then the next day was also red, and then we also were red the next day afterward. And then early January, another bull flag, right? But of course, after this happened, we ended up making new all-time highs. And yeah, so another bull flag, right? Sorry. Another bull flag. We gap up, fail, and then the next day was very red, okay? So I'm assuming, right? Like I think that could also happen for tomorrow, but it's not 100% sure because the last two times that this happened, the MACD blue momentum indicator, right? It was pointed downwards. Right now, currently, the MACD blue momentum indicator is pointed upwards. So that is the only difference here. So it's not 100% sure that we will fall into tomorrow. This could just be a retest back at the 22.6% fib level, and you know, that would just be a retest of support and then a continuation higher. But given the news and what's going on in the market, I didn't want to just blindly buy at support. What I would rather do is buy into momentum. So that's why yesterday's play, we bought into momentum, and we opened up green because of that reason. So today, clearly, you can see that the short-term momentum for the day is pointed downwards, in my opinion. And based off of these last two bull flag breaks, it was worth taking a little stab at a lotto put. I wasn't completely sure of, you know, the overall direction of the market, but, you know, if these lotto puts do hit, they're going to be up like a really good amount. So it's a good risk reward, in my opinion. And that's my thought process behind why I wanted to buy into the puts. Okay. So let's look at the SPY now. Clearly, you can see that we came back and retested these levels of support, 434.74, and we held this 433.34 level very clearly, right? Obviously, these are going to be the supports moving forward tomorrow. And then, of course, 431.50 and then 430, right? We already know that. You can see today we clearly failed at the 20 exponential moving average as well. But now the upside resistance levels are going to be 440 and 443.38. So overall, same exact levels that I've been sharing in the last few videos. And overall, you know, I am short overnight. I think that we could have a red day tomorrow. And of course, this isn't the only reason why I am bearish, because remember, I tweeted a few days ago that we held at the 38.2% fib, and generally that would be a bullish sign. But now today, the issue is that all of the other bullish signs that were there on that day are not applicable right now. So as the video progresses, I'm going to show you guys all of the other things. So for now, here's that really for the SPY. There's not much else to really talk about. Now we have to look at everything else in confluence to see why the overall market, why everything doesn't really look as good as it did before. All right, so there's that for the SPY. Let's take a look at the Russell 2000. All right, so the IWM. Let me show you guys. Okay, so keep your eye on this blue MACD level, this blue MACD number, right? So you can see, I mean, not right now, but for now, you can see that the IWM broke and it gapped up, but it failed at multiple levels of resistance, right? Technically, we did hold this downtrend level, which is fine, right? But this isn't the most bullish setup, right? Clearly. And this is like a pretty clear reversal of this very important like 205 level on the IWM, right? Now, in terms of the MACD, right? If you look at yesterday's MACD, it was this blue number. It was 1.91, right? Today, it's 1.88. So the MACD is falling lower, even though... So basically, the MACD is falling very, very little, even though we dropped over 1% today on the IWM. So what that is telling me is that there's a lot more room to the downside. So that's another reason why it was, it made sense to buy into a LOTTO put, because if the IWM, which was leading the other indices, is showing this much potential weakness in terms of momentum, it makes sense to take a little stab at some downside move, right? Also, you can see that the RSI is already showing the downside. So the candlestick didn't really, we failed at multiple levels of resistance. We are moving downwards in the RSI, and the MACD is showing tons more room to the downside. So overall, for tomorrow, really 200 and 201.50 need to hold as support. And again, like the same levels, it's just the same levels currently. We haven't really broken out of this range just yet. So yeah, there's really that for the Russell. It doesn't look that bullish at the moment. Okay, so now let's go ahead and take a look at the large tech stocks, the 30-year bond and the NASDAQ. So, all right, Apple, clearly you could see that the blue MACD line is moving upwards, right? But we failed, and we closed in a very, very bearish way. We failed to hold above 168.34. We broke below, like we couldn't break above the 20 exponential moving average either, and we fell back down. Okay, so clearly, the only way we really start moving upwards on Apple now is if there is like some ridiculous momentum and buying pressure. But that is not as likely. All right, so Apple overall looks bearish. Microsoft also clearly looks bearish. You can see that the blue MACD line is starting to move downwards here. We gapped up and we failed multiple levels of support, and now we're trading below 300 again. We're trading below 297.97. So overall, Microsoft does not look bullish either. Let's take a look at Google. Google obviously also does not look as bullish, but it held support, which is fine. And we failed basically at the 2740 level on Google. And we can also see this MACD is moving upwards, but it's not really showing too much. Okay, so so far, all of these large tech stocks have not shown incredible strength. Okay, that's what we're looking for. We're looking for if these tech stocks are showing strength and worth buying into. All right, currently they haven't. Amazon clearly has not either. Okay, it broke down below this bull flag, and the blue MACD line is also clearly moving downwards as well. This is not bullish either. And last but not least, let's take a look at Tesla. Tesla also clearly does not look like a good time to just buy, right? All of these stocks are showing more downside potential. And you can see now also on the RSI on Tesla is also pointing downwards. The MACD is also falling as well. Even though we had a big red day, we fell 4.6%. Yet the MACD barely fell. It fell from 24.80 to 22.80. So that is a very, very small drop in the MACD, but a huge drop in the equity price. So that means that there's a lot more room to the downside, in my opinion. Overall, all of these large tech stocks are showing more downside room. So the IWM looks bearish. The large tech stocks look bearish so far. The SPY looks bearish. And now let's go ahead and take a look at the 30-year bond and the NASDAQ. All right, so on March 1st, I said, the SPY and the IWM came back to retest 38.2% fib, which is generally a bullish retest. But I didn't want to swing anything because it would be too risky. And let's look at what they were doing on March 1st. So we fell here on March 1st. But we dropped down to the 38.2% fib. And buying here would have been too risky, in my opinion, on this candle here, because we could have potentially kept falling. But we ended up gapping up and having a green day. And we ended up buying on March 2nd. And that worked, right? But the circumstances on March 1st was that the bonds were breaking out, and they were they were also very, very strong. Okay? Currently, the bonds are not as strong as they were on March 1st. So currently, yes, the market came back and retested levels of support similar to March 1st, right? Because I just showed you on March 2nd, we ended up going up higher. But the thing that was different on March 1st was that the bonds were up here and we were breaking out. Currently, the bonds are not doing that. So the bonds aren't showing extreme strength, but the equities are showing weakness. So overall, I mean, this isn't terrible for the bonds, but I'm talking about overnight, very, very short term, just for tomorrow. This isn't the most extremely bullish thing, but overall, for the 30-year bonds, this is a bullish reversal. The overall momentum of the bonds are now moving upwards, which is very, very bullish for the tech sector, for the stock market in the short term, in my opinion. And I'm not talking about immediately tomorrow, but in the coming weeks, potentially, this could be a very, very good sign that the tech sector could have a big bounce soon. And we've been monitoring the bonds, and usually the bonds are forward-looking. So if the bonds start showing a lot of strength, but that strength has not been realized in the equity price, the equities end up following. And currently, what's happening with the bonds is just a normal, consolidation after a huge break upwards. Essentially, we just need to hold 155.14. And ideally, what's most likely going to end up happening is we're going to come back and retest this high, which is this gap at 155.06. But aside from that, the bonds are not showing extreme strength. So this is sort of just bullish to neutral, right? And aside from that, you guys understand my thought process with all of this now. Let's go ahead and take a look at the NASDAQ. All right, so once again, for the NASDAQ, you can see that the MACD is actually falling lower, right? We gapped up, had a red day, and now the MACD number, it went from 1.94 to 1.81. Yes, we held support, but the difference is that on March 1st, the bonds were friggin' skyrocketing, all right? Right now, they're not. So there's no reason to be super bullish overnight, in my opinion. So again, you can see that this was a bull flag. We gapped up on the bull flag, had a red day. This is not a bullish setup. Like, this is not a reason to just buy short or buy long, all right? Especially, with all of the news and everything that's going on right now, it's just, please, there's no reason to just constantly be bullish every day. And it's our job to adapt every single day to what's going on. And we have to leave our biases to the side. And the one time I decided to alert shorts, I hope they work like in the past few weeks. But yeah, man, this is just, everything just looks really bearish. And it makes sense to just buy into LOTTO puts because the risk reward is going to be huge if they end up falling lower. So overall, you can see that the NASDAQ came back and retested this 340.80, 338, and 339 levels, this whole zone here. Held support, but you can see that the RSI is now starting to fall. This MACD is also starting to fall. The IWM's MACD is also starting to fall. So this is not really a bullish time. We don't see the momentum really moving upwards, so that's not a really good sign. And it's not a reason to just try to buy into every dip. it would just be like trying to catch a falling knife. So the other thing I need to show you guys now is Bitcoin, because Bitcoin was also a big reason why the markets were, Bitcoin was also like a reason why we ended up going up higher the next day. But now, I just want to show you guys what is going on with that. All right, so there's that for the overall stock market. Let's take a look at Bitcoin so you guys, we can look at everything in a much bigger picture, okay? All right, so Bitcoin on March 1st, very, very green, and we were breaking above resistance, okay? So Bitcoin was breaking above resistance. The bonds were skyrocketing, right? If this decides to load, the bonds were skyrocketing, right? Bitcoin was breaking above resistance. And that's one of the reasons why, even though that the markets fell to support, the markets ended up bouncing into the next day. But currently, you can see that clearly Bitcoin is not showing that same strength. It's actually showing weakness. It's actually showing that we're going to come back and retest this trend line, most likely. It looks like 40,000 is definitely on the table here for Bitcoin. And buying right now in this formation right now is not a bullish. It's not smart. It's not even whether it's bullish or not. It's just not smart to try to buy into this weakness. And that's another reason why. So we don't have the confluence of bullishness in Bitcoin. We don't have the confluence of bullishness in the bonds. Rather, Bitcoin looks bearish. The bonds look neutral. The overall equity market looks bearish. So, like it doesn't take rocket science. Like, it's not rocket science. So it makes sense why, like with everything considered, the market might fall tomorrow. But of course, I could be completely wrong. But I mean, you have to take these shots if you are a trader, because everything is really pointed towards the market falling lower. All right, so let me clean this up. So Bitcoin does look like we can fall down to this trend line. This trend line would be around 41.3. And if 41.3 doesn't hold, we're most likely, most likely, we're going to come back and retest 39.6 to 40,500. So that would probably be a place where people would start buying again. You can see that the MACD is starting to fall lower as well. You can see that the RSI is starting to fall lower as well. So clearly overall, the market is showing weakness. Crypto market is showing weakness. The equity market is showing weakness. The bonds are not showing extreme strength. So I hope this video made sense. And I hope you guys had an amazing day. And I will see you guys tomorrow. Thank you.